Welcome back to yet another insightful trading episode. And today I'm going to be talking about five indicators that you need to have. And these indicators are not the traditional types, they are basically based off price action concepts. So, because I solely trade price action concepts, I do not use the traditional indicators like the RSI or moving averages. So, these indicators are basically to help me spot out key levels to reduce my stress in looking out for those areas. So the first indicator I'm going to talk about is the fair value gap FVG by nephew Sam. You can easily get it by just searching for FVG and favorite the one by nephew Sam to get started. So for those who are pretty new in trading, a fair value gap is a three candle pattern that has a noticeable distance between the wicks of the first and third candles. The idea behind it is that during periods of strong momentum, price can move so quickly, leaving behind a gap where little or no trading took place. And this gap creates an imbalance in the markets and acts as a magnet for price to come back and rebalance itself before continuing on its intended direction. So, with this fair value gap indicator now, this is the 1 hour time frame as usual, my favorite to trade from. This indicator here shows you basically that there's an imbalance in the sell side. So as you can see, price is already reacting off of it. Yeah. So rather than spotting out fair value gaps by yourself all the time, so it can get time consuming. So with this indicator, all you just need to do is add it, and whenever you know on the charts, it maps it out for you by itself. And you can go to the settings and customize it. If you want it to show on any time frame, you can go through the settings here. It's pretty easy, simple to use, and it's been so helpful in my trading journey. So yeah, this is showing you the bearish 1 hour fair value gaps on the charts here. And so I sort of set it to clean itself after a fair value gap has been filled up. So that's why you can't see any um bullish fair value gap right now. The market seems to be on a very strong bearish trend. So the next indicator I'm going to be talking about is market structure by the same nephew Sam. So market structure by nephew Sam. Market structure simply tells you whether a market is trending or consolidating. To properly understand market structure, you need to know two concepts: break of structure and change of character, also known as market structure shift. A break of structure, or BOS, occurs when price moves beyond a swing high in an uptrend or a swing low in a downtrend, signaling trend continuation. On the other hand, a change of character, or COCH, signals a reversal in the market's direction. If the price breaks below a recent low in an uptrend, it signals a change of character, indicating that the bullish trend may be reversing. Similarly, in the downtrend, if the price breaks above a recent high, it points to a bullish change of character, suggesting a possible bullish reversal. So, we can see on this gold chart that the market is in a strong bearish trend, which means the sellers are very much in control. This indicator just by itself maps out where we can find break of structure. Yeah. You don't need to do anything. You don't need to take out your line tool and start drawing it by yourself. It does the work for you. And here we can see there's a bullish break of structure. Yeah. Then markets changed direction, which means markets had a change of character, signaling a change in trend from this bullish up here to this bearish. So that's why there's the change of character indication. Yeah. So it's just really, really simple to use, and it is very important if you want to save time, and it is pretty accurate. I've been using it for a really long time and it has not failed me. So another indicator we're going to be looking at is the demand and supply zone by backtest bots. Demand and supply zone by backtest bots. Demand and supply zones are areas on the chart where institutional traders have significantly influenced prices, creating areas of solid buying or selling pressure. They are easily spotted by marking out areas of impulsive moves on the charts, and this logic is that price will often retrace back to that zone before continuing on its intended direction. So, this is very easy to, figure out. For some of you who have come across the word order block, um, this shows an area where there is like institutional sell orders have been placed. So as you can see, there's this very large impulsive move where the indicator just maps it out for you. So you know that once price comes back to this zone, which is marked by the last bullish candle before the impulsive sell-off, for SMC traders, you'll be very familiar with order blocks. I call it supply or demand zones. So this area, this also is an area of demand here, right here. This candle here. And so while this area here, it's an area of supply. So it's just basically telling you that once price comes back to that area, you should be ready to sell. And of course, we all know there's no certainty in the forex market, so it doesn't mean these zones work all the time. It's why you need to be very, very strict on risk management. So the third indicator we're going to be, or rather the fourth indicator we're going to be looking at is liquidity swings by Lux Algo. Liquidity swings by Lux Algo. The liquidity swings indicator is a powerful tool that helps traders identify areas on the chart that are rich in trading activity. It shows you areas where price has frequently revisited, and it highlights accumulated volume within them. As a trader, you can use this indicator to highlight critical swing areas which often serve as future points of support and resistance. So this right here, it's a liquidity swing. We can see that there's like very high bearish, sell activity going on here, right here, and the indicator just, makes it very easy for you to spot without you, wasting time. So the last indicator we are going to be looking at is something you should be very familiar with. Trading sessions. I think it's inbuilt by TradingView itself. And for those who are not so familiar with it, I'll just give a very quick breakdown. Every minute of every weekday, traders are buying and selling currencies, and this non-stop activity makes the foreign exchange market unique, with over $8.2 trillion changing hands daily. So this 24-hour activity is made up of three major trading periods known as the Asian, European, and North American sessions. These sessions are often why the market seems to buzz with activity on some hours of the day while looking like a ghost town sometimes. So you want to study your pair to understand when it moves best. For pairs like gold, there you can see that it moves quite well sometimes on Asian session, also known as Tokyo session. And for pairs like US 100, which is the Nasdaq 100, during the Asian session, price moves quite, slow. So you just need to study your pair or study the pairs on your watch list to properly understand the time of the day where it moves, slow, and where it moves, best. And sessions where prices move best are actually the best times to trade because there's a lot of volatility in the markets with volume. So yeah, so we can see on the 5 minutes charts here, we can see that this trading activity here happened on, in the London session. And it just spells it out for you. You don't need to start cracking your head and to figure it out. And for those of us in the West African region of the globe, Asian session starts from around midnight up until like 6 a.m., 7 a.m., while the London session kicks off from there from like 8 a.m. down to like 1, 2, 3, while the New York session takes the baton from there from 2:30 p.m. down to the night time. So you just need to understand your sessions. And so this is just basically it's you've come to the end of this video, and these are to me my 5 favorite indicators to use, and I hope that you see this as a very very good sign to start trading price action concepts with me, and just try it out and see if it works out for you. Thank you very much once again. I'm Mar from Visela Capital, and if you found it educative, please don't forget to like, share, and subscribe.